Hey guys, welcome back to Kryptonite, because I believe that cryptocurrency is the kryptonite of our modern financial system, and I love it. And guys, we need it, especially with what's going on in the banking system right now is exactly what Bitcoin and cryptocurrency and the blockchain was created for. An escape. An escape from a fiat system that will only eventually implode. Just like all other fiat systems before them. This is what's going to happen. So hopefully you're prepared for having some assets to hedge you against our deteriorating currency that will only continue to deteriorate. Guys, it's crazy. The Fed has printed $400 billion, ladies and gentlemen. $400 billion. They, for the last year almost, have been quantitative tightening, aka raising interest rates, aka trying to bring inflation down, which they did. They got it down to about 6%. However, in the last week, 2 weeks now, about half of the progress they've made on quantitative tightening has been evaporated in 2 weeks of printing. Now, I'm sure they didn't want to do this, but they saw that all these banks were going down. And so they stepped in, they printed money to add liquidity so that people could still have their money. And the sheep out there are going to be so happy. Oh my gosh, thank you, Federal Reserve, so much for printing money and providing me with liquidity so I know my money is safe. Well, your money's not safe. You just lost value in your money. You're going to get the same dollar amount back, but you're not going to get the same buying power back. Like you lost money. The dollar amount says the same, but you lost money. That's the reality. That's the way you got to look at it. So, yay, your money's protected, but also your money's not protected now because your buying power just $400 billion just got shot into the system. And it's likely only to get worse over time, which means that your buying power will continue to go down, even if your dollar amount stays the exact same, people. And that's what it's about, guys. Buying power is the real power of money. So don't get caught up in the numbers. Get caught up on what you can actually buy with that money. And are those prices going up? Because they have, as we've seen, and they will continue to do so. So hopefully you're hedged in something, guys. Anything, any sort of asset that you believe in, please, please, please do some research, learn how to invest. Even if you're doing a retirement with a 401k, at least you've got something that's keeping up with inflation at the very least, keeping up your buying power so it'll still be the same when you pull out. That's important. Guys, we're going to take a look at the Bitcoin charts. I am currently in a Bitcoin trade. And guys, I don't know what's going to happen because there are multiple ways that you could look at what's going on right now. I've set my trade, so essentially I've put my money where my mouth is, and I'm going to hold my trade because, guys, as traders, we don't move our stop loss, and we don't really move our take profit. Like, that's trading. You chose the amount you risked, you set your trade, and you forget it. I mean, there are things you can do to manage the trade. You could do certain things, but for the most part, you want to just let it go. It's not in your hands anymore. You've made your bet. Move on with your day and hope for the best. That's all you can do. So I am in a current trade right now. I'm not going to tell you exactly where my stop loss is, but basically, let's look at the reasons why I decided to take this short position. So first off, let's jump on the weekly chart. We can see, if I hide all this stuff here, we had a bit of a candle pattern that is not very bullish. You can see we had a nice big green candle, which is great. But then we have our doji, right? Our indecisive candle. This, a lot of times, can be the top, right? It's not a guarantee. It's just a signal, right? This is not a get in a trade signal. This is just a, hey, let's take a look here. As you can see, we finished with this doji, which again shows indecision. It shows some possible buying and selling pressure there. But again, a lot of times you see this doji at the bottom and top of different runs, essentially, in the market. So that's our first kind of bearish signal here. It's like, oh boy, that's not good to have that kind of candle formation on the weekly chart. And candle formations on the weekly chart are pretty powerful, guys. It's the weekly chart. So, hey, look, perfect example. Look at this right here. Boom. Exactly what I was talking about. Where's the cooler? I want to draw. I want to draw. Can I draw? Where's the little drawing function? Everyone draws when they do this, and I really want to like get into it too and like be drawing and stuff. It's cool. But apparently I can't. That's so dumb. I'm so mad right now. Why can't I draw? Brush. There we go. Okay. Boom. Look at that right there. Indecisive doji candle after 2 big green candles, and then poof, down. Now, I don't think we're going to be seeing that big of a downside in crypto, so let's not worry about that. But I will show you. Okay, so as you can see on the weekly chart, though, we still have the super trend as green, and I still think that we will keep this green super trend on the weekly chart, but it doesn't mean that we can't come back down to maybe even, look at this. We already tested the 200 right here one time. This is actually the low of the 200. The regular 200 would probably be more in the middle there. But we tested the low of the 200. Why not come back and test the low of the 200 again, right? I mean, it's happens all the time. So now if we jump down to the daily chart, another reason why I was interested in this trade was, I think you can see it better on like a smaller time frame here. But there was sort of, at least at the time, things have kind of changed. But you did see the volume start to decrease, right? You had this nice big volume cluster here on this one. And then we went up again, volume declined again. We went up again, volume declined again. So that's also a sign, hey, this trend might be weakening. Normally if this was, let's say this went up, right? Let's say we had, I want to do the drawing again. So let's say we went up. And then as we were coming down, like so, oh my gosh, where'd it go? No, where'd it go? So as we're coming down, this is where we want to see the volume go down, right? During this section. Because that means, okay, hey, look, we had this big run up. Now we're consolidating. You want to see volume go down. Okay, and then basically people are waiting to get into a good price to, you know, at a Fibonacci level or something like that. And then, boom, make the next, continue the trend. We don't like to see price continuing to make higher highs while the volume is declining. That shows weakness. We don't like that. Now, I wish I could delete this stuff, but now I can't. Actually, no, I can do undo. Ha ha! No, I can't do undo? Yeah, okay, cool. Oh. So that was sort of another sign for me. Okay, I'm looking at the volume here. We're getting weak. We're still making higher highs. This is a problem. Oh, I should not have done that. No, I hate when I do that. Another sign, if we look at the Heikin Ashi candles, which I like to use, as you can see right here, we had this specific Heikin Ashi formation. Again, this isn't a, hey, take this trade. This is just a signal. We've got 3 indecisive Heikin Ashis right here with pretty long wicks. Okay, that can also be a sign of a top. Okay, so that's another signal we're looking at now. Ideally, and I didn't wait for this, ideally we'd love to see one big red candle like so with no wick. Kind of like this one here. We got this red and there's no top wick. We don't care if there's a bottom wick, that's fine. We don't want a top wick, right? That just shows a lot of momentum to the downside. So we didn't get that yet. So you could make the case that I got in a little early. And I'll show you other reasons as to why I got in as well. You can also look at the stochastic here on the daily, which is now an oversold and is coming down. So it's just another, I don't really care too much with the indicators, but it's just like a nice little, okay, cool. But I'm more concerned definitely about this price action, these candles. So that is also a sign. Of course, we know that we are at a pretty strong level of resistance. And of course, I clicked out of my other chart, unfortunately. Oh, wait, actually, no, I think we got multiple ones on this one. Yeah, okay. Okay. So as you can see here, we're currently ranging in between these two price points, even kind of making actually a little bit of a symmetrical triangle there. Now you could look at it as say this looks kind of bullish, right? We had this big upswing. Now we're almost going into some sort of flag. So there is a case for bullish momentum. We also look at the fundamentals. The bank just printed $400 billion. Bitcoin goes in the opposite. When inflation goes up, Bitcoin goes up as well. So fundamentally, there shouldn't be a significant retracement based on what the bank is doing, printing billions of dollars, right? So it could still happen, and I'm basically betting for it to come back down and retest the top of this support here, this red box. I'm expecting, based on, again, weakening volume, based on some other factors I'll show you as well, I'm expecting this to come back down and retest this level here at about 25. Okay, and that's where I have my somewhere around that range. I'm not gonna tell you exact numbers, but somewhere around there is where I will be taking profits on my trade. So I do believe it wants to come down and retest this level again. I think I could be wrong. We could, again, with the bank doing what they're doing. Sometimes I'm not so sure. Another case for bearishness. I don't know about you guys, but this looks kind of like a diamond pattern. Okay, big upswing, diamond. Typically, that means we're going to the downside. Now, it can continue, right? There's all probabilities here. So there's no guarantee that it doesn't just keep going. However, diamond pattern after a big upswing can tend to be more probability of bearish. So we got more evidence for maybe a bit of a retracement. We also, you can see we broke market structure here. We're making higher highs, higher highs. This was our first significant higher low, and we made another higher low. So if we're looking at market structure, we did break market structure. We went to a 4-hour super trend red. So just another case to be made for the price. Now you could sort of look at it this way too. If you want to look at more bullish, you're like, hey, it kind of looks like a flag, right? Again, this is all, you're kind of missing that bottom though. So you might have to make some adjustments on that, something like that. So you could like look at it like, oh, look, it looks kind of like a bull flag, So I do think, it's tough for me to see that. It looks awkward. And then we had this weird random volume spike in the middle. Usually you want to see any sort of consolidation, you want to see the volume kind of slowly declining as it gets more and more into the pattern. When you have random volume spikes in the middle of it, you're kind of like, it kind of makes it less likely that pattern is going to play out how you think. So big old random volume spike in the middle, I wouldn't say that bodes too well for this being a bear or a bull pennant, if you will. Now, no CVD divergences, unfortunately. That would be really nice to see that, I must say. Where was I? Had another chart out here, and of course I accidentally clicked off on it because, I'm awesome like that. Let's go. Sorry, guys. Hold on one second while I load my different layouts here. Which one did I have up? I definitely had... let's do this one. So another big reason why I was leaning bearish is we've got bearish divergences playing out right here on the daily time frame. You can see we have a higher... This is like too big for my screen here. Sorry about this. Okay. As you can see, we've got a high and then a significant lower high. We actually had two of them. We had one here, and then I guess you could say, oh, technically, well, that wouldn't have been a divergence. Anyway, big bearish divergence here on the daily time frame. What that tells us is that, there's going to either be a retracement or price is just going to cool off and it's just going to range sideways for a while. So one of the two can, like I said, it can either be one of those two. Sometimes it represents a reversal. Sometimes you have multiple divergences before you get a reversal. Like it could make one more upswing and then make one more divergence and then finally break, So obviously you can't trade off of purely divergences either, because it doesn't mean that divergence is going to be the one that finally breaks it and it starts going to the downside. So always got to be aware of that. I think there's some divergences even on the lower time frames, kind of same thing, same deal. Multiple divergences here as well on the 4-hour. So we're just showing, hey, we're cooling off, trend is weakening. We're going to consolidate or even come back down. Now this is looking kind of rounded as well. If we just look at the, I mean, that looks kind of like it's rounding, which would, you know, I'd say would be more bearish in general, just that kind of lean there. So that was another indication. I was looking at these RSI bearish divergences, and I was like, well, shoot, there's a lot of divergences. So at the very least, we're going to cool off a bit. So that was just another evidence point for more of a bearish trend here. Let's take a look at what this one was. Oh, this one's actually my trade. Well, you can kind of see it. Anyway, this right here is a major resistance box that I have here that I've drawn myself. So this was an area I expected price to hit and likely to cool off. And, you know, we don't typically break support or resistance, especially when this significant right off the bat. Again, though, with what the banks are doing, anything's on the table at this point. I wouldn't even be that surprised if it like barely stalled out and then just kept going. Just because, I mean, fundamentally, if you're just going to print billions, then yeah, Bitcoin's going to go up. So I'm gonna hold my trade because I still feel like my analysis is good, and you know, in a normal environment, it should retrace from this resistance. This is a very strong resistance. Once again, with the bank doing what they're doing, I would not be surprised in the slightest if my trade failed completely, because the banks are pumping the bags of the Bitcoin holders. So this is my major resistance box here. We also, on kind of the shorter time frames, had like I guess the reason I kind of got into it was we did have this like triple top right here on the 1 hour, where I was like, man, you know, that resistance obviously pretty strong. You don't see triple tops very often. Thought for sure we'd come down. As you can see, I'm currently winning the trade, but again, it's got to come all the way down close to 25, which I honestly think it can do. Here's another reason why I got in the trade was this. We had a rising wedge, which is a bearish pattern, probability-wise. We broke below it and even retested it with a big bearish move with high volume. So, I mean, that's pretty textbook, right? And we know the pattern of a falling wedge is all the way down here, actually at 23. I think the resistance at around 25 is really strong, so I don't expect that in this particular situation, the falling wedge would actually make it down to that price point. I think that's a little bit too much of an ask based on the strength of this previous resistance. So I don't think it'll play out that way to go all the way down that way, but I do think it's reasonable to think based on, you know, it could make it a majority of the way there. Again, with what the banks are doing, though, you never know. So I do feel pretty good about this trade. I feel like my analysis was good. We had multiple things going on. We had, usually I'm looking for patterns first. That's kind of the way that I like to trade, is patterns first. I'm looking at volume. I'm looking at RSI divergences. I try to keep it kind of simple. Volume's important. Price action and patterns are important. And of course, support and resistance, obviously very important, especially on the longer time frames, right? The longer the time frame, the stronger the resistance or support. So I'm looking at those resistances on the longer time frames, and I'm, saying, hey, price should stall out there at least a little bit, right? So I feel pretty good about this one. We'll see if it plays out in the end of the day. But I did want to show one other cool kind of chart I busted out that I also thought was pretty interesting. See if I have it on here. No, I don't have it on here. Been messing around with some new indicators. Just trying to have a little fun. Seeing what kind of works, seeing what cool things, I can discover. And I did notice something pretty cool with a volume called the TSV, which is the, I forget what the name of it, the something segmented volume, TSV. Time segmented volume. All right. So nothing crazy here on the daily that's looking like. But if we go on the 4 hour time, for example, big divergence on our time segmented volume, right? Time segment, okay. Because we had a high, we had a big volume, but look at the decrease in volume on these next highs. I mean, we even went negative on these highs. So that right there is a pretty big divergence, I'd say, and that's a volume indicator. I tend to lean more on the volume indicators, the CVD indicator, the regular volume indicator. A volume to me is something that can't be faked as well as other indicators to kind of trick retail into getting into trades. We also look at the ADX here. As you can see on the 4-hour, we're below 20, meaning that it's likely that we're going to range, which is exactly what we've been doing. As soon as we came, well, we started ranging even before, but we dropped in here and we've just been ranging. So no surprise there. So it's kind of up to you guys. Do you think, I mean, to me, this looks very rounded. Rounded is not good. I wouldn't say that's very bullish. This to me does not look like a, some sort of, like obviously you get like a bullish pennant where you go like something like this, and then you get like a cool, like these nice sharp kind of move like this, right? That's like a nice bullish pennant. Boom. That does not look like that to me. Obviously, you can get like a bullish, it can kind of look like nice little upswing, right? And then maybe price kind of makes like a nice symmetrical triangle, which you could maybe kind of say, let's say like we get here, and then price like maybe ranges like this, and then kind of goes like this, right? Kind of makes like a cool, nice symmetrical triangle. That obviously, I don't really see that there either, at least nothing super sharp. I mean, all I see is like you could maybe say something like this, but then you're missing those tops. Obviously it could be diamond. I don't know. To me, it looks rounded. It looks diamondy. Does not look sharp like one of those. Again, we've got multiple volume indicators telling us we're kind of showing weakness. Like I said, I feel pretty good about my trade. I'm hoping it'll play out also because I've got buy orders set down at some lower levels because as it drops, I want to be picking some up on the cheap. So it'd be a win-win for me because I'd win my trade as it drops down, and then I'd also be able to accumulate more at lower prices. So it'd be like a double win. So I'm really, really holding out hope for this one that this trade comes through because I'll win money on the trade, and then I'll win money in my buys, being able to buy Bitcoin cheaper. Always good to buy Bitcoin cheaper. That is for dang sure. So there's just a couple cool indicators I've been kind of messing around with, trying out. And you can see right here, nice little, starting to make a little symmetrical triangle right inside this range area. So, maybe that's more bullish. We're also over the 200. Again, it's up to you guys. You decide, bullish, bearish. To me, I'm definitely leaning more on the bearish side. In fact, what if we did something like, I'm always looking for new patterns emerging. Maybe, could we do something like this? Is this too sharp? It looks way too funky. Nah, it doesn't look like anything. Just trying to see if we got any sort of like larger rising wedge or something. Again, it'd probably be more like a broadening, some sort of broadening wedge of some sort. If we, there's really not a lot of great sort of drawings you can make that would really explain it. If I'm going to be honest, I have to go make like a something clean here. Let me see. I'd like to kind of start with like a clean chart. Maybe get something like this. I'm just spitballing here, just seeing if there's a larger pattern at play here that, but then I kind of bust it out of it. I don't know if you can really use that. Price action is too far away. Something like this. But I mean, what that doesn't look like anything. I think it's because it's definitely more like trending as opposed to consolidating, I'd say. This is definitely like a trending market. But I do think there's room for us to come down, but then still continue the trend, right? We come down, we retest 25, which I think is totally reasonable. And then we continue the trend because this does not look like a consolidation type pattern. This looks like a trend starting. And based on what the banks are doing, this trend is likely to continue for a while. So if you are not, again, not financial advice, not a financial advisor, do your own research. But I know what I'm doing. I'm putting as much money as I can into Bitcoin, cryptocurrencies. I've got some stuff in DeFi. I'd like to buy a house, but unfortunately, that's not in the cards for me right now. I blew way too much money day trading early on. A lot of money that I probably could have used for a nice. I almost probably had enough for a tiny home, but I blew it all, guys. I blew it all day trading, undisciplined day trading. Don't do it. Pay $5,000 for a trading. Like you will save so much money if you pay $5,000 to get like a proper education than you will just trying to day trade on your own. Like you'll lose 10 times that trying to trade on your own. So if I could go back in time, I would have taken the $60,000 that I ended up losing trading. I would have taken like 5,000 of that and bought like the best coaching program I could, and I would have saved $55,000 probably, because I wouldn't have done nearly that bad. But I had someone actually coach me and understand trading psychology, understand risk management, understand all those things, which now I understand, but I didn't understand, and I blew a lot of money, guys. So just be wary if you're a trader out there. Get the proper education. It's worth every dime. You will save so much money. I have given my tuition to the market, guys. More than it, too much tuition to the market. So maybe it would have been better off trying to use that for college to get a degree or something. I don't know, but I gave my tuition to the market, and now it's time to get my tuition back. Anyway, trading for me though is always going to be fun. I'm always trying to keep a fun attitude about it. At the end of the day, it's just fun. It's fun to analyze. It's fun to predict. So regardless of whatever happens, whatever, I'll just keep learning, keep growing, keep building my skills, and maybe I'll be profitable. Maybe I won't. I don't know. Don't really care. To me, it's just fun. So hope you can look at it that way too. Again, when you're not worried about the price going up and down, then that's when you kind of get in that good zone as a trader where it's just fun. I just see the signals. I make my trades. Some I lose, some I win. Who cares? It's a good place to be. I don't think I have anything else to share with you guys other than freaking GameStop. I have a good buddy of mine who was telling me for a while to buy GameStop. He's like, yeah, it's good, man. Like they're doing some stuff in NFTs, and like they have a lot of liquidity now from what happened, and blah blah blah. And price was all down here, and I thought about it for a couple of weeks. I was like, man, I should just throw like $100 in there. My buddy, he's a real smart dude. He believes in it. He's telling me some things about what holders are doing and the company, what they got going on. I'm like, okay, well, man, and then I got lazy, guys. I didn't get around to it. And then bam, came all the way up, shot up from $15 to $27, and it gapped. Look at that massive gap. Gapped so hard during the aftermarket hours. Seems to have found support around 22. However, I do have this resistance line drawn here. And until it breaks this line and actually uses it as support, I'm probably going to hold off still, because I missed that nice move there, and I think it's possible that we get maybe another. You can kind of see it's like a falling wedge there, so maybe we could come down again. Maybe we reach more of the crescendo of this wedge here, come all the way back down to 15 again, and that's when I'll be more interested in buying again. But right now, it kind of looks kind of nice right there, like that, huh? A nice falling wedge. I don't usually look at a lot of other stocks, but this is actually kind of intriguing. Might even look to maybe take a short here. I might do a little research this week and maybe take a short here back down to 15. Interesting. All right, guys, that's my update on Mr. Bitcoin. One more thing, I guess. I was doing the fib retracement, and you can see we're bouncing around in between the 786, which again isn't bullish either. Typically, you want to see that nice retracement down to like the golden pocket. When you get in between these two and it like stops at the 786, like that's not always a good sign. That's usually a bad sign. It usually means you're gonna like chop around in there for a while. You would rather have had it go actually straight down through that level, and then at the golden pocket, that's where you'd want to see that reaction. And that's exactly what could happen, because as you can see, the golden pocket is lining up perfectly with my support box at 25,407. So again, a lot of things pointing to the likelihood maybe we come down, test the golden pocket, test that resistance. I mean, I don't know. I'm feeling pretty good about it. I'm just saying. I'm trying to think if there's anything new to report in terms of the financial world. I mean, I think we all know what's going on, or at least those that follow the financial world know what's going on. Banks are insolvent. It's bad. Banks worldwide are printing money to give them liquidity. Small banks will probably shut down. It'll consolidate into big banks. Fed will, maybe raise another interest rate, maybe. And then they'll probably start coming down. And then asset prices are going to start going off the chain. The average American is going to suffer and struggle because a lot of their money's in cash and their wages are not going to increase at the speed at which inflation does. So everything they want to buy is going to get more expensive, their rent, etc. And again, 50% of Americans don't own assets that hedge. So 50% of Americans are going to get even poorer than they were before. And a lot of them, unfortunately, are not financially educated, so they don't understand what's going on or don't understand the fact that although, yes, you're getting your money back in your bank, it doesn't have the same buying power, and so therefore it's not the same. You have less money, even though you don't think that you do. You have less. That's a hard concept to understand, especially when we've been in a system where we can trust it for the most part and things have been good for a long time. Hard to wrap your mind around that the banks are kind of stealing from you when they inflate the money because they're stealing away your buying power, which steals away more of your money to buy the same loaf of bread. That's now $3 more per loaf or whatever it is that you buy. So please, please, please get hedged in something, man. Your favorite companies, commodities, gold, maybe like precious metals, get some precious metals. For me, it's crypto all day long. That's all I got for you guys. As always, save your money, grow your money. Kryptonite out.